Wall Street ends higher. Dow Jones rises over 130 points, while S&P 500 and Nasdaq bounce back after Monday's AI-led sell-off. Nvidia pops 8.9%. All eyes on Fed's decision, which meets for the first time in Trump's second term. Oil prices edge up on a smaller than expected rise in U.S. crude inventories. Supply concerns and demand uncertainties also support the rise. Gold prices hold steady as dollar jumps ahead of the Fed rate decision. Bajaj Auto reports earnings better than estimates with margin about 20%. Management says that the company will outpace industry's EV growth while maintaining ICE leadership. In key earnings today, Tata Motors to report 4 to 5% revenue growth, while Maruti is likely to post a steady set of Q3 earnings. From the financial space, stable asset quality will be positive for Bajaj Finance. After the demerger announcement and eventual spin-off, ITC Hotel shares will list on the exchanges today. Shareholders will get 1 share of ITC Hotels for 10 shares of ITC. Analysts value ITC Hotels between 170 to 190 rupees per share, even as the last discovered price was 260 rupees. Hello, good morning. You've tuned into CNBC TV 18 and you're watching Power Breakfast with me, Vinny Motiwala. Asian markets today, most of them are on holiday like yesterday. So Taiwan, South Korea, Hong Kong as well as China are closed for the Lunar New Year holidays. What is open today is Australia as well as Japan, which is both opened up higher today in trade. Australia as well as Japan taking cues from the Wall Street, which ended on a positive note. Let's quickly look at what the Nifty implied open is also indicating for the Indian markets, because yesterday, the second half of the trading session, we still see a bit of a fall coming in for the Nifty 50. Today, indicating a 50-point uptick is what the Nifty implied open is indicating. So, yes, slight bit of a positive start, but again, that's sustaining those levels is something that we're watching out for in terms of the Nifty. So, yes, keep an eye out on the Indian markets today. As of now, implied open indicating a bit of a positive start for the markets. And like I was mentioning, the U.S. markets, Wall Street that ended higher, and this is when you're looking at the tech-heavy Nasdaq, that's a 2% gain. S&P 500 gained 0.93%. Dow Jones rose 0.31% in trade. S&P 500 as well as Nasdaq actually made a comeback after those sharp losses we saw on Monday. That was a sell-off that was spurred by the DeepSeek as well as the threat that it was posing to artificial intelligence trade. Now let's go across to CNBC's Angelica Pebbles, who's joining in with us to give us a wrap on what happened on Wall Street.
U.S. markets were up across the major indexes in Tuesday trading, bouncing back from Monday's sell-off after the emergence of Chinese AI company DeepSeek had Wall Street questioning U.S. AI dominance. The Dow up 137 points, the S&P 500 higher 55 points, and the tech-heavy Nasdaq jumping 392 points. Monday's biggest casualty was Nvidia, which lost about $600 billion in market value, representing the biggest one-day drop for a U.S. company in history. The stock rebounding today and finished up about 8%. Broadcom and Oracle, which were also hit with big share declines Monday, recovered some losses today, each up more than 3%. And Elon Musk's X platform is making its first major move into financial services. CEO Linda Yaccarino announced a deal Tuesday with Visa to be its first partner in a so-called X Money account. Visa will allow users to transfer funds between accounts and make peer-to-peer payments with services such as Zelle or Venmo. When Musk bought Twitter, he said the platform would eventually allow people to conduct their, quote, entire financial world on it. That's what's happening here in the U.S. Back to you in Mumbai.
Thank you so much for that. But let's move on. And the Fed is meeting for the first time in the second presidential term of Donald Trump, who has already signaled that he wants lower interest rates. But what is the market pricing in? Here's Steve Leisman, who's joining with us with the findings of CNBC's Federal Reserve Survey.
Higher inflation, but also more growth. That's the assessment of our respondents to the CNBC Fed survey when we asked about the effects of President Trump's expected suite of all the policies. Well, 64% are saying that they believe the Trump administration's policies will likely be either somewhat or extremely inflationary, most of them in the somewhat category. How about for growth? Somewhat or very positive for growth, 60%. Again, most of them in the somewhat. A bunch, though, think it could be possibly negative for growth. And look at individual policies. Let's look at tax policy. You can see very divided here, being some saying it's worse for inflation, some say it's better for inflation. Deregulation, though, that's seen as something, this is something the administration has talked about as better for inflation, not so immigration and tariff policy, where they're pretty definitive that those are worse for inflationary outcomes. How about for growth? Let's take a look at the individual policies. What you see is tax policy and deregulation both seen as better for growth. Again, not so sure on immigration and tariff policy, seen as worse outcomes for economic growth. Guy Labas of Janney Montgomery Scott writes in, reasonable economists can disagree just how inflationary tariffs or reductions in immigration might be, but they are inflationary. Richard Sichel of the Philadelphia Trust Company, he emphasizes that optimism and risk-taking have increased. Lower taxes and less redundant regulations, along with the ongoing success of technology innovation, promote more efficiency and profits. Overall, the Fed expected to cut twice this year. The respondents have less confidence in those cuts now. But because of the uncertainty, the Fed is not expected to act much before June, the first time, and then again between September and the end of the year for possibly a second cut, Kelly.
Okay. Let's also listen in now to David Zervos, who's the chief market strategist at Jefferies, talking about the upcoming Federal Reserve interest rate cut decision and what is he expecting there.
So I think the market's set up for it. I think they've got no reason to sort of get aggressive right here. They've prepped the market for it. Why would you change it at this point? We have, I think, a much lower neutral rate than many in the market or on the committee think is out there, that we're kind of going back to neutral rates at 2019 levels. We've articulated that in a lot of our research related to the balance sheet. But, you know, it's early days. We can wait. Let's get a few more CPI, PCE data prints that feel good, or a little bit of weakness on the payroll side, and I think we can resume again and get moving lower, which is where I believe we're headed this year, and I think that'll be quite supportive for risk assets.
Okay, and that's all the global night actions that we have for you all this morning. But how is all this going to be impacting our Indian markets? We have a team of research, as always, joining in with us to set you up for trade and tell you which are the important stocks to watch out for. And Vivek, good morning. Let me start with you. What is the trade setup looking like? Yesterday, the last few hours that we saw, the Nifty again see a decline. But what are we expecting today?
Absolutely right, Winnie. Yesterday was a day of volatility. All of the hard work that was done by the markets and the kind of recovery that you saw intraday, you did see quite a bit of a sharp dip coming in as far as the second half was concerned. But today the cues are much more positive. All of the US indices rebounded very sharply after day before yesterday's sell-off. So that's some positive cues coming in from the US markets, like you mentioned. All eyes today on the Fed Reserve decision as far as the rate cuts are concerned. Now, oil markets, something that we track closely, that too rebounded from the multi-week lows that it was struggling with. Indian markets, like you mentioned, a very volatile trading session. Broader end of the markets continue to see significant selling pressure. Banks and NBFCs were the stars of the show yesterday. This on the back of the RBI liquidity enhancing measures that were announced day first evening, and on the back of that, banks actually outperformed quite significantly. Well, a whole host of earnings is what we will be looking out for. First, earnings reaction, which are the companies that came out with results yesterday post-market hours: Bajaj Auto, JSW Energy, Colgate, BHEL, Suzlon, all of these will react. And today, some important earnings, especially from the auto pack: Maruti, Tata Motors, NBFC big boy, Bajaj Finance, as well as a whole host of other mid-cap names too will come out with their results today. Asian markets, most of them are shut today. Japan is trading, but GIFT Nifty is indicating a positive start. It'll be interesting to see whether that can sustain.
Absolutely, Vivek. We'll surely watch out for that if it's going to sustain going forward. But let's move on and go across to Hormaz, who's here to tell us which are the important stocks to watch out for in trade this morning. Good morning, Hormaz.
Morning, Winnie. And you run out of breath. You're trying to describe the number of earnings that are lined up in today's trading session. But we'll start off with some important names that came out after market hours yesterday. Bajaj Auto is one of them. Most of the other parameters were in line with expectations, but the focus was on margins, that there was a fear that it might slip below 20%, but the company has managed to sustain above that level. 20.2% was the margin figure for the quarter. Suzlon will also react to results. Revenue and profit almost doubling from last year, but deliveries were at a record high at 445 megawatt, which was around about 160% growth from last year. Colgate's numbers were in line or marginally below expectations, but the toothpaste volume growth was in high single digits as compared to a CNBC TV18 poll of a 4 to 5% growth. Motilal Oswal, the slowdown clearly evident on a quarter-on-quarter basis. The wealth management business was down 10%. The capital market business was down 13%. The asset and private wealth management business, though, grew, although the profits were down 60% on a sequential basis. SBI Cards as well, the profits were down on a year-on-year basis. The provisions were up. Asset quality, though, was stable, but their annualized credit cost remains a key pain point, and the 9.4% figure coming in compared to 9% last quarter and 7.5% last year. BHEL's numbers, it was a strong execution in the power and industry business that led to a revenue growth and a revenue beat in the quarter, but gross margins expanded over 1,000 basis points, but the margin expansion on the EBITDA level was below expectations, and that was on account of a rise in other expenses. MGL's numbers almost similar to IGL, better than expectations, but on a year-on-year basis, of course, you would see a lot of red on the screen. VIP Industries as well reporting a loss compared to a profit last year. Revenues also down, so were the EBITDA and the margin figure. Apart from earnings, you also have ITD Cementation, where the Adani Group has received the CCI approval to acquire the 72.64% stake that they had initially proposed. The NMDC is also in focus because the company is planning a 70,000 crore rupee capex over the next 5 years to achieve that 100 MMTPA capacity by 2030. And JSW Steel has extended the long stop date to acquire that 92.19% stake in Minas de Revubo to the 30th of June. And also keep an eye out for Swiggy and Afcons Infra because their shareholder lock-in period ends today.
Okay, Hormaz, thank you so much for that. Surely a whole host of stocks that we're keeping an eye out on today. But finally, we have Sudarshan, who's joining in with us to tell us the important cues that you should be keeping on your radar in the world of F&O. Good morning, Sudarshan.
Good morning, Vinny. So while pressure in the mid-cap space has continued, there was a buying in the large-cap space, and we saw that Sensex and Nifty closing with gains, while mid-cap index amid volatility closed with minor cuts. For today, GIFT Nifty ahead of FOMC outcome is indicating a start with minor gains. Talking about the flows, yesterday we saw FIs selling more than rupees 4,900 crore, but buy figure by DIs was almost rupees 7,000 crore. In the index futures too, FIs have sold nearly 500 crore, but good parties, they have added long positions of more than 4,000 contracts. At the same time, they have reduced short positions by 30,000 contracts. Also, interesting data coming from option side. FIs in the index option have bought more than rupees 4,000 crore. Also in the stock futures, their buy figure was more than rupees 2,500 crore. And now in the stock futures, they have bought for 5 consecutive days. And total buy figure is now almost rupees 10,000 crore. Talking about FI's long exposure, now it has increased to 25%. And on the client side, long exposure remains at 68%. On the option side, on the call side, 23,000 call has shed more than 13 lakh shares with premium at 50, and on the put side 23,000 and 22,900 put were active. So what does option data indicate? That on the upside it's capped around 23,000, and on the bottom side it's around 22,900 or 22,800. So support is now seen somewhere around 22,740, resistance at 23,200. Stocks that will in focus, the stocks that have come out of banner India Mart, Manappuram Finance, MGL and PNB. Now there is no stock that is in the ban.
Okay, Sudarshan, thank you so much for giving us the update in terms of what will be happening in the world of F&O this morning. Yes, that's what we're keeping an eye out on. On that note, we're going to slip into a very short break. Bajaj Auto will be reporting their Q3 numbers today. We'll be back with the key highlights of what you should be keeping on your radar on the other side. Welcome back to Power Breakfast on CNBC TV 18, and Bajaj Auto reported their Q3 numbers post-market hours yesterday. Sudarshan is joining in with us to give us the fine print on how the numbers were looking like. Sudarshan?
So Bajaj Auto, like TVS Motor in this challenging environment, has come out with numbers which are much better than estimate. It was margin-led beat. Margin has come in above 20%. There was an expectation that margin this time may slip below 20%, but Bajaj Auto has managed to post margin of 20.2%. That's about 20% for the 6 straight quarters. Now, so what are the positive factors that have worked for Bajaj Auto in Q3? First, demand remains healthy in 125cc plus segment. Second, raw material cost, which used to be higher few months ago. Now it seems that raw material cost has stabilized. Third, because of favorable currency environment, margin seems to have moved higher. And fourth, despite an expansion that company has been taking in the EV segment, it continues to maintain market share in the petrol segment. But some of the negative factors, first, lower exports of KTM. KTM overseas have been facing certain issues, and that's the reason exports of KTM are lower in the Q3. Second, entry-level segment demand remains a concern, and company like Hero MotoCorp and other companies has taken a price hike in certain areas like Uttar Pradesh and Bihar. Third is Nigeria remains steady. Per month, company continues to do the selling of 35,000 units, but it's far away from the peak level. And fourth, pricing concerns, and due to the heightened competition that EV segment has been seeing for E3-wheeler and E2-wheeler, company is likely to have taken certain price cut. Talking about the numbers, EBITDA has moved 6% higher. It has come at 2,581 crore, and margin has come at 20.2% versus 20.1%. Outlook too is healthy. Company says exports will continue to grow at more than 20%. Second, domestic domestic motorcycle segment is likely to see a growth of 6 to 8%. Till 9-month FY25 growth was 8%, but it's against 6% that industry had seen in H1 FY25. Also, it expects 125cc plus segment to grow faster than the entry-level segment. So overall, earnings are better than estimates. Even outlook is healthy by Bajaj Auto.
Okay, Sudarshan, thank you so much for that. Now let's move on. And in other news, Bajaj Auto, the latest entrant in the race to buy Rallied Enterprises, was turned away by the market regulator SEBI. The Securities Exchange Board returned the letter sent by the Florida-based entrepreneur seeking permission to acquire 55% of Rallied share at 275 rupees per share. The request was returned as it did not meet SEBI's exemption application criteria. Now, do note that the offer put forth by Bajaj Auto was 17% higher than what Berman family has offered to Rallied shareholders. Okay, on that note, we're going to slip into a very short break. Up next, we'll get you the cues from the world of commodities, so stay tuned for that. Welcome back to Power Breakfast on CNBC TV 18, and now it's time to go across to Manisha, who's joining in with us to tell us what's happening in the world of commodities. What was the overnight action that we saw in terms of crude, gold prices? Manisha, good morning.
Morning, Vinny. Thank you for that. I'll start with the crude oil prices, where we have seen a percentage point of gains in the overnight market. Well, the U.S. planning to issue tariffs on Canada, Mexico imports this week is what really seems to be bothering the market. Apart from that, Libya local protests also have prevented crude oil loadings in the last couple of days. So that means there is a supply disruption there. And then the street is also looking at weak Chinese data, rising temperatures, that is capping much of gains in the crude oil prices. But when it comes to the metal space, well, there is a definite increase here because you are looking at the slight decline in the US dollar index, and then US threatening to impose tariffs on copper, aluminum imports has led to US trading in premium for many of these metals vis-a-vis what is trading in the Asian markets or on London for that matter. US also is pushing for production within US, and that seems to be taking prices on the higher side. And before the tariffs can be imposed, there's a lot of buying and inventory increase that is happening that also has led to a near-term price increase for many of these metal prices.
Okay, Manisha, thank you so much for that. Now let's move on and get you the latest update from the Mahakumbh Mela, where a stampede was reported earlier today morning after a barrier broke. The incident took place ahead of the Amrit Snan today, where an estimate of 10 crore devotees are expected. Ambulances rushed to the ghat where the incident took place. Now, news agencies Reuters as well as AFP report multiple deaths, but confirmation from the state authorities is awaited. With that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, your Bazaar Morning Call.